Hello, Madam Dr. Nurul Yasmin. My name is Hiroshin Tamil Arasu. My matrix number is 06 F1102. Me, along with my teammates, going to present five cases. Before we move to our presentation, let me introduce my teammates, which is Nandisri, Dhiran, Mirttika, myself, and Mohammad Shafiq.
Hello madam, my name is Mirttika Napapa Shanmugam. My matrix number is 06D8023F1017 and I'm going to talk about case 3. I'm going to describe about ethical problems based on the case 3. The first one is threat of self-interest. Company A still owes 25,000 ringgit from prior year after the firm permitted them to postpone paying the 50,000 ringgit audit fees over a 10-month period. In addition to causing financial reliance, this could compromise impartiality and independence. The second one is about advocacy threat. The partner may have compromised professional judgment and integrity by promising to have the audited financial accounts complete in time to assist Company A in obtaining a bank overdraft extension. The third one is self-review threat. The partner infringed the principle of professional competence and due care by failing to evaluate the audit plan prior to the commencement of work. Now I'm going to identify the affected parties based on the case 3. The first one is the audit firm and partners. The risk of facing disciplinary action for abusing their independence and ethics. The second one is Company A client may receive a biased or unreliable audit report. The third one is Company A's bank determines loan choice based on audited financial statement. The last one is the public and regulatory organizations. The public's confidence in the accounting industry may be weakened. Now I'm going to talk about optional solution. The first one is after putting precaution in place, continue with the audit. Ensure audit and tax services are performed by separate teams. The second one is hold off on signing the audit report until all fees have been paid. Give the client time to settle payment before completing the engagement. The third one is step down from the audit engagement. If Company A cannot settle fees and independence debts cannot be initiated, withdraw from the engagement. The last one is continue the audit without taking any precautions. Continue audit and sign report even though 25,000 ringgit remains unpaid and no safeguards are applied. Now I'm going to tell about solution for the case. The first solution is proceed with audit but ensure full settlement of overdue fees before signing the audit report. Reduce financial dependency and restore independence aligned with MIA bylaws. The second one is withdraw from the engagement due to ethical threats. Guarantee complete adherence to independent and professional integrity. The third one is assign another partner to review the audit. Retains autonomy while carrying on with more stringent supervision, shows due care and professional conduct. Now I am going to select and justify the best solution. Proceed with audit but ensure full settlement of overdue fees before signing audit report. It offers the client professional service while maintaining the firm's objectivity and integrity. Before signing the audit report, the partner ought to demand payment of all unpaid fees. Assign an impartial partner to examine the audit strategy and findings. The last one is all safety precautions and ethical evaluations should be recorded in the audit file. I'm going to justify the solution for the case 3. Fundamental principles that feature more prominently for safeguarding: integrity, objectivity, professional competence, and due care, confidentially, professional behavior. There are 5 fundamental principles. The first one, integrity. When discussing price agreements and term of payment with Company A, be truthful and open. Second is objectivity, steer clear of prejudice and undue influence brought on by unpaid bills and intimate client relationship. Third one is professional competence and due care. Despite workload pressure, make sure audits are properly planned, reviewed, and supervised. The fourth one is confidentially. When discussing important matters internally, keep all customer financial information confidential. The fifth one is professional behavior. Adhere to the MIA bylaws and refrain from any actions that bring the profession into disrepute. And I'm going to explain about the key consideration in resolving the dilemma. The firm's financial reliance on Company A posed a self-interest threat due to the overdue audit fees ringgit. Offering the same client both audit and tax services could undermine objectivity. Adhere to the auditing standards and MIA bylaws. Steer clear of any action such as signing a report before independence is guaranteed that could discredit the firm on profession. There could be an advocacy threat if you help the customer get a bank loan. Refrain from being swayed by the client banking deadline or financial struggles. Now, the last one, I'm going to explain about course of action to resolve the dilemma. Designate a different partner to conduct an independent review of the going concern assessment audit file. Carefully assess the cash flow problems and financial status of Company A. Make sure audit and tax compliance tasks are handled by separate teams. Before beginning the audit, report the situation internally and get advice or approval. Before making an option, gather enough audit evidence. That's all for case 3. Thank you.